Welcome to Solidarity Spotlight, the place where we share with you bleeding-edge stories. I'm your host, Solidarity. Let's discover what's happening today in blockchain. The cryptocurrency landscape presents a complex tapestry of volatility and innovation as we examine developments across multiple fronts. Market conditions reveal a challenging environment where traditional financial pressures intersect with emerging digital asset dynamics, creating both opportunities and uncertainties for participants across the ecosystem. Current market sentiment reflects a provisional downturn that has captured widespread attention among traders and institutional observers. The cumulative cryptocurrency market capitalization has retreated to approximately $3.79 trillion, following a 3.25% decline, suggesting that market participants are reassessing their positions amid rising volatility concerns. Despite this price contraction, trading volume has surged by over 12%, reaching $233.55 billion, indicating that market participants remain actively engaged even as prices fluctuate. This dichotomy between declining prices and increasing volume often signals periods of market transition where new equilibrium levels are being established. Bitcoin's performance illustrates the broader market dynamics at play, with the flagship cryptocurrency experiencing a 2.05% decline to approximately $110,237. This movement has coincided with a reduction in Bitcoin's market dominance to 57.8%, potentially signaling a shift in capital allocation patterns across the broader digital asset spectrum. Ethereum has faced more pronounced pressure, declining 5.53% to $4,446, while maintaining a 14.1% market dominance. These movements suggest that market participants may be responding to macroeconomic factors that extend beyond cryptocurrency-specific developments. The regulatory landscape has witnessed significant developments that could reshape the relationship between traditional financial institutions and digital assets. The dismissal of Federal Reserve Governor Lisa Cook by President Trump represents a notable shift in monetary policy leadership that may influence future cryptocurrency regulations and central bank digital currency initiatives. This personnel change occurs against a backdrop of elevated tensions between political leadership and Federal Reserve independence, potentially creating new dynamics for how digital assets are regulated and integrated into the broader financial system. The regulatory implications extend beyond immediate policy considerations to encompass broader questions about institutional authority and the role of digital assets in monetary policy frameworks. Market participants are likely monitoring these developments closely, as changes in Federal Reserve composition could influence future decisions regarding central bank digital currencies, cryptocurrency regulations, and the integration of digital assets into traditional banking systems. Security concerns continue to dominate blockchain discourse as industry observers grapple with persistent threats to digital asset infrastructure. Recent analysis suggests that cryptocurrency investors have lost approximately $2.5 billion to various security breaches during the first half of 2025, representing a significant escalation from previous periods. This trend has prompted security researchers to characterize the situation as an endless war between cybercriminals and blockchain security measures. The emergence of sophisticated scam operations illustrates the evolving nature of these threats. New services like Vanilla Drainer have reportedly extracted over $5 million in just 3 weeks, demonstrating the rapid pace at which malicious actors can deploy and scale their operations. These services operate by providing fraudsters with sophisticated phishing tools and software designed to compromise victim accounts and drain cryptocurrency holdings. The success of such operations reflects both the increasing sophistication of criminal networks and the ongoing challenges faced by users in securing their digital assets. The security landscape reveals distinct patterns in attack methodologies and target selection. Wallet compromises have emerged as particularly damaging, accounting for substantial portions of total losses, while phishing attacks continue to represent a significant threat vector. These developments suggest that security measures must evolve beyond technical protections to encompass comprehensive user education and awareness programs. Institutional investment flows present a more optimistic narrative amid broader market uncertainties. Bitcoin exchange-traded fund inflows reached $219.1 million in a single trading session, with major funds including FBTC, IBIT, and ARKB leading the charge. These inflows suggest sustained institutional interest despite short-term price volatility, potentially indicating that sophisticated investors view current market conditions as presenting accumulation opportunities rather than reasons for broad-based exit strategies. The institutional investment trend extends beyond Bitcoin to encompass broader blockchain infrastructure investments. Reports indicate that major investment firms, including Galaxy Digital, Jump Crypto, and Multicoin Capital, are pursuing a $1 billion fundraising initiative focused on Solana acquisitions. This potential investment represents one of the largest concentrated blockchain infrastructure investments in recent memory and could significantly impact Solana's market dynamics and ecosystem development trajectory. Such large-scale institutional commitments suggest growing confidence in specific blockchain platforms and their long-term viability. The focus on Solana, in particular, reflects recognition of its technical capabilities and growing ecosystem adoption, particularly in areas such as decentralized finance and non-fungible tokens. If successfully completed, this investment could establish new benchmarks for institutional blockchain investment and potentially catalyze similar initiatives focused on other major blockchain platforms. Venture capital activity within the blockchain sector continues to evolve as established players expand their investment capabilities. Anchorage Digital's launch of a dedicated venture capital unit represents a significant development in how cryptocurrency infrastructure companies are approaching ecosystem development. This initiative focuses on supporting early-stage protocol development with particular emphasis on areas including Bitcoin, decentralized finance, real-world asset tokenization, and decentralized identity solutions. The strategic implications of this development extend beyond immediate investment considerations to encompass broader questions about how cryptocurrency infrastructure companies can support ecosystem growth while building competitive advantages. By providing both capital and strategic support to emerging protocols, established players like Anchorage can potentially influence the direction of blockchain development while creating new business opportunities. Innovation in blockchain gaming and entertainment continues to attract significant investment and development attention. The partnership between Animoca Brands and Antlers Ibex Japan to create a Web3 entertainment investment fund focused on anime and manga intellectual property represents an interesting convergence of traditional entertainment assets and blockchain technology. This initiative aims to bring dormant Japanese intellectual property onto blockchain platforms, potentially creating new revenue streams and engagement models for entertainment content. The timing of this announcement coincides with renewed interest in non-fungible tokens and digital collectibles, suggesting that market participants see emerging opportunities in the intersection of entertainment content and blockchain technology. The global reach and resources of the partnership participants suggest this initiative could serve as a model for similar efforts to digitize and monetize traditional intellectual property through blockchain platforms. Development activity across major blockchain platforms provides insights into long-term ecosystem health and innovation trajectories. Recent analysis indicates that projects including Internet Computer Protocol, Chainlink, Starknet, and Sui have demonstrated the highest levels of development activity over recent periods. This metric often serves as a leading indicator of platform health and future capability expansion, suggesting that these platforms may be well-positioned for future growth and adoption. The emphasis on development activity reflects growing recognition that long-term blockchain success depends on continuous innovation and platform improvement rather than short-term price movements. Projects that maintain high levels of development activity often demonstrate greater resilience during market downturns and stronger recovery potential during subsequent market upturns. Token distribution events continue to shape market dynamics as projects transition from private development phases to public trading and utility. World Liberty Financial's Token Unlock event, involving approximately $1.5 billion in tokens, represents one of the larger distribution events in recent memory. The structured approach to this unlock, including vesting schedules and community governance mechanisms, suggests increasing sophistication in how projects manage the transition from private to public token availability. These distribution events often create short-term volatility as markets adjust to increased token supply, but they also represent important milestones in project development and community engagement. The success of such events often depends on the underlying project utility and community support rather than purely speculative trading dynamics. The decentralized finance sector continues to experience significant evolution as total value locked fluctuates in response to market conditions and protocol developments. Recent declines in overall DeFi total value locked reflect broader market pressures, but the resilience of leading protocols suggests that core DeFi infrastructure remains robust despite temporary value fluctuations. The continued development of new DeFi protocols and services, combined with increasing institutional interest in decentralized finance solutions, suggests that the sector may be positioning itself for renewed growth as market conditions stabilize. The integration of traditional financial services with decentralized protocols represents a particularly promising development area that could drive significant future adoption. Blockchain infrastructure development continues to attract both investment and technical innovation as projects seek to address scalability, security, and usability challenges. Recent node sale activities and network expansion initiatives suggest that infrastructure development remains a priority area for both developers and investors seeking long-term blockchain exposure. The success of various node sale initiatives and network expansion projects reflects growing confidence in blockchain infrastructure as both a technical solution and an investment opportunity. These developments often require significant technical expertise and long-term commitment, suggesting that participants view blockchain technology as a fundamental infrastructure layer rather than a speculative investment vehicle. Market outlook considerations encompass multiple factors ranging from macroeconomic conditions to technological developments and regulatory changes. The current environment presents both challenges and opportunities as traditional market pressures interact with blockchain-specific developments to create complex trading and investment dynamics. The resilience of institutional investment flows despite short-term price volatility suggests that sophisticated market participants maintain long-term confidence in blockchain technology and digital assets. This institutional support may provide stability during volatile periods while supporting long-term ecosystem development and adoption initiatives. That concludes today's Blockchain Spotlight. I would love to know your thoughts. Thanks for listening, and don't forget to follow me for more spotlights. See you next time.